It's been a tough year for Aussie miners, but rising iron ore, copper and gold prices have helped trigger a surge in the shares of some ASX-listed stocks. Consumer sentiment slumps while businesses remain relatively upbeat, and we reveal the 9 ordinary superfoods for good health. Welcome to Fear and Greed, daily business news for people who make their own decisions. It's Wednesday, the 10th of April, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 2 things to mention very quickly. The first is that if you haven't already, head to fearandgreed.com.au and sign up for our new weekly newsletter. Very easy. All you have to do is put your email address in, and that's really all you get from us is a weekly newsletter. No spam, nothing else, just a newsletter.
That's it. The second one goes out later on today, so sign up this morning and you'll receive it late morning. Well worth a read, I would say, Michael. Mind you, you and I write it, so of course we think it's well worth a read.
We're a little bit biased in that regard,
Somewhat. I'm
inclined to agree with you. The other thing I need to mention is your interview that comes up after the show today. It is a cracker of a chat today. You're talking to Bran Black, who is the Chief Executive of the Business Council of Australia.
Yes, we talked to Bran all about the federal government and the reforms that they've introduced, particularly around industrial relations, what it means for big business, also what the BCA wants to see in terms of improvements in competitiveness and efficiency and what the government can do about it. So a very big picture chat with Bran. Lovely fella. So well worth it. There was a third thing, though, that you had to mention this morning, Michael. It is a Wednesday, isn't it?
Oh, that's right. That's right. And normally I'll plug this at the end of the show, but I'll squeeze a quick mention in today. Early on, it is, of course, a Wednesday, which means it's a new episode of How Do They Afford That?, which is our sister podcast that's all about personal finance and making your money work a little bit harder for you. This week's episode is all about childcare, would you believe, Sean?
Very relevant, particularly for a week that we've been talking about Bluey.
Oh, yes. It feels like I'm gradually just taking over this show, aren't I? And just driving all of my own agendas.
Not at all, Michael. Not at all. You're more than welcome.
Thank you, Sean. Now, let's get on with the show. The main story this morning, it's been a tough run for Australian miners, with share prices mostly underperforming all year. But a little bit of good news out of China, alongside geopolitical tensions, have helped sentiment towards some of the biggest ASX-listed diggers to turn in recent weeks.
Primarily, I'm talking about the iron ore miners, the gold stocks and the copper producers. A bunch of the nickel and lithium miners are struggling still, with prices of those commodities much lower in recent months. Take the big 3 miners, BHP, Fortescue and Rio Tinto. Iron ore futures hit a 2-week high yesterday, back above $107 a tonne. It follows stronger than expected data from Chinese factories last week. As a result, BHP and Fortescue metals were up 2% yesterday. Rio Tinto finished 3.2% higher. Keep in mind that BHP is down 10% this year so far. Rio's off more than 7%. Fortescue's down about 14%. The big 3, though, are finding a few friends in the market at these lower prices. Investment bank Goldman Sachs put out a note saying the fall in prices means the miners are back in value territory. Goldman analysts forecast that iron ore prices won't fall much lower because Chinese construction activity will pick up, while there are some supply constraints out of both Australia and Brazil that should support iron ore prices and the big miners. Also yesterday, ratings agency Moody's came out and said it expects BHP to maintain solid earnings through cyclical movements in commodities prices, even as it balances its ESG responsibilities and potentially higher claims linked to the Samarco Dam disaster. Rio and BHP are also benefiting from elevated copper prices, which are at about 14-month highs. So the upshot of that, there's just a few investors around the place that think the big 3 miners might be good value at the moment.
You mentioned copper prices just there, Sean. What about the copper producers and the gold stocks?
Well, let's start with the gold guys first. Gold's trading around record levels. We've been talking about that for the past couple of weeks. Since the end of March, market leader Northern Star's share price is up 11%. That's a pretty good return in 2 weeks. Newmont's jumped 15%. As has Evolution Mining. I mentioned BHP has benefited from higher copper prices. So too has the largest ASX-listed pure copper play, Sandfire Resources. It's up 22% this year. And then there's South32, which is a truly diversified miner. It's got bauxite, alumina, aluminium, copper, lead, zinc, nickel, metallurgical coal and manganese. Over the past fortnight, its share price is up about 13%. Mining has been very much a pillar of the Australian economy for decades, but it has had a rough run, at least in share price terms, for most of this year. A few investors now think things might just be getting a bit better.
All right. How did local markets perform yesterday?
The S&P ASX 200 closed up 0.5% to 7,824 points. Best among the large caps were the big miners. We just went through those. Otherwise, Aristocrat Leisure rose 1.7%. REA Group was up more than 1%, as was Westpac. Worst performers among the large caps included Cochlear, that was 2% lower. Goodman Group fell 1.4%. Macquarie was off 1%. CSL and Telstra both ended lower. Best on the day was lithium producer Liontown Resources, while Agri-Group Elders jumped 8%. After it tumbled big time on Monday. Ansell's share price jumped nearly 7% after it resumed trading following its announcement that it will buy Kimberly-Clark's personal protective equipment business for about $640 million.
And international markets, it's still all about gold, isn't it?
Sure is. New high yesterday in US dollars, $2,353.79 an ounce. Pretty amazing. Now, most of that's on the back of central bank purchases and geopolitical tensions. According to Reuters, the central banks of China, Turkey, India, Kazakhstan, and some Eastern European countries have been buying gold. The reason? Because gold is a store of value. There's a limited amount of the stuff, and it's a safe way to park money if you think things look a little unclear. That's what central banks are doing, buying gold. Park their money there. Otherwise, oil prices are down a touch. The Aussie dollar is back above 66 US cents on Wall Street. It's a big few weeks with the March quarter earnings season kicking off in coming days. Some of the big banks start things on Friday. The S&P 500 is up 9% this year. Really has been a great first 3 or 4 months, but it is looking a bit pricey. So earnings need to live up to expectations.
Sean, you know how we have our weekend edition of Fear and Greed.
Yes.
And it is rapidly actually becoming the most popular episode that we do each week because it is a competition between you and me, and we nominate the biggest business story of the week and most remarkable and a bunch of other categories. And I chose last weekend to nominate the price of gold as my most remarkable story because I just thought it was extraordinary, remarkable even, that the gold price had hit records. It had passed the $2,300 US dollar mark last week. I reckon if it keeps going, and I won, of course, I should probably mention that I actually won not just the category, but the overall episode. If it keeps going, I reckon I could get a second week out of that. I reckon I could run with the gold price again, and don't want to count my chickens, but I reckon I could win again.
Not much becoming about the last 30 or 40 seconds of commentary from yourself, Michael.
I learned all of my grace from you, Sean.
I must say, the conversation I have later in the morning with the BCA's Brand Black, off air, he was saying he loves the weekend edition, and he says his kids like it too. And he says maybe his kids wouldn't be that interested except for the fact that it's a competition, and they really like to see who's going to win. And I really like to see who's going to win, so long as it's me.
Yeah.
But that hasn't been the case the last few weeks. I've been less interested the last few weeks.
And you win 9 out of 10 shows. And that's why I really think there's a groundswell of support for the underdog, Michael Underdog Thompson.
I'm going to go and say we'll be back in a moment with the rest of the day's business news.
I think that's a good idea. Sean, there are early signs that price pressures and capacity constraints are easing and demand and supply are coming more into line in the economy.
Yeah, it's good news. The National Australia Bank Monthly Business Survey shows that business conditions and confidence were little changed during March. Essentially, it says confidence is a bit below average, even though conditions are better than normal. National Australia Bank Chief Economist Alan Oster said that's been going on for more than a year, but it won't last, and the latest readings suggest that things are just coming back into balance a little bit. Growth in labour prices, product prices and retail prices all eased somewhat during the month. That's good news as well because, of course, that would feed through to inflation, and inflation is the thing that we're trying to cull.
Meanwhile, consumers, Sean, remain in a funk with sentiment falling to deeply pessimistic levels.
Do you think funk is one of the great words in the English language?
Oh, it's a lot of fun to say, isn't it?
Funk.
Funk.
They've been pessimistic for 26 months, and there's just little sign of improvement, according to the Westpac Melbourne Institute Consumer Sentiment Index. Is that like a 26-month funk?
That is the very definition of an extended, a prolonged funk, Sean.
Yeah, absolutely. So a neutral level, so let's talk about funkiness here. A neutral level when it comes to consumer confidence is 100. This month's reading came in at 82.4 points. That was down a couple of points. This funk just keeps going on, Michael. Outside of the deep recession of the early 1990s, it's the second most protracted period of consumer pessimism since Westpac began surveying in the mid-1970s. Pretty amazing. Westpac senior economist Matthew Hassan says broadly it just reflects this ongoing inflation challenge and these higher interest rates.
Right, moving away from funks now, it is official. Australia, the US and the UK will consider Japan's inclusion in the AUKUS military pact, saying the country can promote peace and stability in the Indo-Pacific region.
Japan wants to strengthen its security alliances to push back against an increasingly aggressive China in the region. Defence Minister Richard Marles and his UK and US counterparts said they would consider bringing Japan into the so-called Pillar 2 part of the pact, which covers advanced technologies such as hypersonic missiles, quantum computing, artificial intelligence, undersea drones, and electronic warfare. Which, for mine, Michael, far more interesting than submarines. Anyway, Prime Minister Anthony Albanese said Japan is a natural partner for AUKUS to collaborate with under the Pillar 2 part of the alliance. The announcement came as Canada's Prime Minister Justin Trudeau said his country is considering joining AUKUS as well, having held excellent conversations with the three founding nations. Now, I'm not sure that we have invited him. Can I just say that, Justin Trudeau? You're considering joining JAUKUS. We'll put Japan on there too. Well, have we asked you? I'm not so sure about that.
Look at you, Sean. But finally, Australia is a founding member of something and you're trying to throw our weight around.
Yeah, totally. Yeah. Anyway, Trudeau reckons that Canada might need nuclear submarines to patrol its Arctic waters, so suddenly he's interested in AUKUS/JAUKUS.
God, it's going to end up as the longest acronym, isn't it? The more countries that join, it ends up being like 300 letters long.
JAUKUS.
It might need to be workshopped, that one, I reckon. Look, just staying in the geopolitical space, Vice Admiral David Johnston will serve as the new chief of the Australian Defence Force.
Mr Albanese, the Prime Minister, made the announcement yesterday, an announcement that received broad support across both sides of politics. The PM said Vice Admiral Johnston is a proven leader with the experience, intellect and resolve to lead the ADF in a complex and rapidly changing global strategic environment. He said Vice Admiral Johnston has consistently distinguished himself pulling different elements of defence together, including in the Indo-Pacific, Iraq and Afghanistan. He'll replace General Angus Campbell, who by the end of his tenure will have been the longest ever serving Chief of the Defence Force.
Santos's planned $15 billion LNG project in Papua New Guinea has run into more problems, with a final investment decision now not expected until next year.
Some of the bids from contractors wanting to build the massive project would make the facility uneconomic, Santos said, and the venture, which is being managed by France's Total Energies, will keep working with contractors to, hopefully, find a commercially viable solution. The final investment decision was due last year, then it was delayed until early this year, then late this year. Now it looks like next year. The consortium includes Total Energy and Santos, as well as ExxonMobil and JX Nippon. Papua LNG is one of Santos's biggest growth projects. As a result of the delay, the company's share price fell more than 2% yesterday.
We talked before about the funk that we're in. We are, it seems, a miserable bunch, Sean, because even though the economy has performed remarkably well, more than half of Australians still think it will tip into recession in the next 12 months.
And that's despite households becoming more optimistic about their financial prospects. The quarterly Dye & Durham survey, conducted by Resolve Strategic, found a grim but improving mood among Australians. Cost of living still dominates the list of worries, followed by housing affordability, according to a report in The Australian. Cost of living is the number one issue when it comes to influencing who people will vote for in any election. While households remain under pressure, 2/3 now believe inflation has peaked or will come down over the next year. A similar proportion believe the Reserve Bank's next move will be down. 2/3 think that. That means 1/3 think that the next move in interest rates will be up. Crazy stuff, Michael.
That really is. All right, turning to international news now. Hamas says Israel's ceasefire proposal that it received from Qatari and Egyptian mediators did not meet any of the demands of Palestinian factions.
Now, however, the group added that it would study the proposal, which it described as intransigent, and deliver its responses to the mediators. So it wasn't a hard no. According to Reuters, Hamas has rejected the Israeli ceasefire proposal made at talks in Cairo, and Israeli Prime Minister Benjamin Netanyahu has set a date now for an invasion of Rafah. That's something which Prime Minister Anthony Albanese confirmed earlier yesterday. Rafah, of course, is Gaza's last refuge for displaced Palestinians.
There's been a bit of rare good news for Tesla shareholders, with the stock jumping 5% after Elon Musk announced he'll unveil a Tesla robotaxi in August.
Yes. Now, Tesla's share price is down 30% this year, and Mr. Musk has been trying very, very hard to renew some enthusiasm for the EV maker. Yesterday's announcement was part of those efforts, as was his comment that artificial intelligence will be smarter than the smartest human by next year. Anyway, that's an aside. Tesla watchers, I must say, are starting to get a little weary of the big predictions. Now, there was a report in Bloomberg, which is pretty typical of how people are thinking about Tesla now. The report says that Musk has been promising autonomous vehicles for more than a year, but it hasn't happened. When Tesla started work on the system it markets as autopilot in 2013, Musk estimated that it would be able to handle 90% of the miles customers drove within a few years. 11 years later, hasn't happened. In 2016, Musk alluded to autonomy in a second iteration of his master plan for the company. Tesla started selling a feature called full self-driving. 8 years later, the system doesn't really measure up to its name. In 2019, Musk declared that 1 million Teslas would soon be on the road and fully capable of driving themselves. He first hinted at plans for a dedicated robotaxi in 2022. Then there was yesterday's announcement. The moral of the story is be very careful what you believe when it comes to Tesla, and that seems to be how investors are reading it.
Yeah, and finally, Sean, a major study has come up with 9 very normal foods to eat every day to stay healthy, but there is one superfood that outdoes all the rest.
The findings, which appeared in the Times of London, are an amalgam of a bunch of different scientific studies. So jumping right into it, people's health is better, particularly around weight, if they have an avocado a day. Heart health is helped by an apple a day. Whole grains, think quinoa, rye, oats, buckwheat, that helps gut health. A glass of milk fights fatigue and boosts fertility. Leafy greens can slow brain aging. I've rushed out and bought quite a bit of that.
Stripped the shells of spinach.
That's it. A handful of nuts lowers the risk of respiratory disease and cancer. Olive oil helps you live longer, while multivitamins can help maintain memory. And yogurt, which is the only food on this list that I find totally inedible, will help blood pressure and blood sugar control. The one superfood, have a guess which one it is of all those.
Oh, so just one of those is the best?
Well, yeah, I mean, there's just one that the studies continually come back to because of the health benefits.
Apples?
Avos. Starts with an A.
Oh.
Not just because of what they contain, but also studies show that people that eat an avocado a day are actually less likely to eat other foods like refined foods and high salt foods.
Oh.
So it has a double whammy. Yeah, interesting. Apparently it's all about avos.
Oh, there you go. I'm actually quite surprised by that. And you know what? It's nice because avocados are very versatile. Rather than getting one of those superfoods that's like wheatgrass or something, which is very specific. Yeah. Avos you can have on kind of toast or in salads or anything like that.
Dessert, ice cream, absolutely, go for it.
Feels like you're mocking me there a little bit, Sean. Now, up next is the Fear and Greed Daily interview. You're talking with Bran Black, Chief Executive of the Business Council of Australia, a very influential group.
Yeah, it sure is. It is the peak body for the big businesses in Australia. We talked to Bran about what he wants from this government and what needs to be done, particularly in the budget and post-budget, about improving competitiveness and efficiency in the economy.
Yeah, it is a good one. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 10th of April, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.